Good evening, esteemed guests and participants. I am Charu, and on behalf of the India FinTech Forum, I welcome you to an engaging webinar on driving card engagement and customer loyalty, emerging trends, and the 2026 playbook. We are glad to mention that this webinar is supported by Hyperface. Just a few points to note before we start the session. Attendees may enter their name and post their questions on the webinar screen in the Ask a Question panel. The questions will be taken towards the end of the session, and this webinar will be recorded and published on India FinTech Forum's YouTube channel as well. Today, we have the privilege of hosting a distinguished panel of speakers. Joining us are Mr. Nimit Jain, Vice President Product at Hyperface, Ms. Rekha Nayak, SVP and Head, Digital Platform and Products, Credit Cards, HDFC Bank, Mr. Shankar Sundarajan, Partner, Deloitte, Ms. Kavita Murali, Head of Business Development, Consulting and Analytics, India and South Asia at Visa. And last but not least, Ms. Ankita Joshi, Head of Cards Portfolio at Axis Bank. Their collective expertise and leadership in the cards and payment ecosystem promises to offer valuable perspectives on driving sustainable card engagement, strengthening customer loyalty, and shaping the 2026 playbook for issuers and fintechs alike. Without further delay, let's dive into the insightful discussions that we have ahead. I would like to invite Mr. Nimit Jain to please take the conversation forward.
Sure. Perfect. Thank you, Charu. Hi, everyone. Thank you so much for your time today and joining us on a Friday evening more so. So without further ado, let me just dive in. Just a second. Yes. All right. Great. I hope my screen is visible. So I'll take the next few minutes to just quickly talk about what we do at Hyperface and why we are basically excited about this panel and to learn from it during the next 1 hour. So very quickly, we are Hyperface. We've been around for 5 years. Our primary focus has been to help banks kind of take a modern approach to their credit card portfolio, right? I'll walk you through what is the philosophy and how the product stack is structured. But our focus basically has been how do we help a typical Indian bank, right, supercharge their portfolio cards or the co-branded cards, right, right from the day they envision how it should work to basically help them go live with it in 1/4 of a general timeline, right? So we are basically to give you a further view. We work with likes of AU Bank, Federal Bank, Indian IndusInd Bank, and on one side, right, and then other typical popular co-brand consumer brand products like Flipkart, Super Money on the other side, right? At this point of time, I feel we worked with pretty much every leader in the consumer fintech space, right? And in the banking space, we're friend with a lot of guys across Indian market, and now we've started going into the Southeast Asian market, starting in Vietnam, right? Coming to how do we exactly, approach this problem statement? So we have something called Smart Engage, which is actually a full stack solution which takes care of one, providing you a fantastic backend system to automate your portfolio management, campaign processing, reward ledger management on the backend side, which also includes things like helping you create automatic user cohorts through a feature that we call smart tags, right? Or setting up automatic communication nudges the way you would do on a tool like MoEngage, right? And then on the front end side, we also solve for the end user experience by giving you PW and SDK that can be directly embedded inside the banking app or the co-brands app, right? Fully customizable, fully usable from day zero, right? With full support for SSO and other kind of options to make sure your user experience completely seamless, right? And all of this comes along with the support of us being able to put it on your premises, right? So the Hyperface, the whole platform stack at Hyperface is fully on-prem friendly. Because we understand, regulated entities prefer having full control on the engine and the data pipeline that being used, right? So whatever we have built so far and whatever we keep building will always be on-prem friendly, right? So on-prem, which includes both your cloud hosting as well as literal, bare metal hosting, right? So that's part one. From a very high level, essentially, when we talk about value proposition, right, there are basically two broad segments of a portfolio, I would say, a product portfolio. One is from the end user perspective, we try to drive hyper personalized engagement through many tools, whether it's about running temporary campaigns or whether it's about building CVPs which are cutting edge in the market, right? That is one segment. The other segment is uh, how can we help the teams at a bank to move 10x faster and 10x more confidence in whatever they're doing from a workflow perspective, right? And essentially, the way we do this is we've been studying how different bank systems and teams work over the many years, right? And basically, we end up building a single course nerve center, which can seamlessly integrate with the current bank workflow, data pipelines, and the current ops team workflows, right? We come and sit within your current system and essentially give everyone a single dashboard, a single source of truth for you to play with any data point to either unlock a campaign or do any analysis or go live with any communication program, right? And all of that comes along with the support for role-based access management, clean APIs for you to integrate with any platform, and then obviously making sure that you are 100% RBI compliance friendly at any point of your journey throughout, right? From an ongoing basis, essentially the way we look at changing the life for a team that we work with is step one, we help you identify the right people to go after. Step two, we allow you to set up the right experiments all the way from configuration from a no-code dashboard to essentially giving that experience to the end customers through a PW and SDK, which is embedded again in your mobile app, or sending them personalized communications through your preferred channel, whether it's SMS, email, WhatsApp, RCS, you name it. And then finally, once you're live with your idea or experiment, letting you track that from a dashboard, which is again highly visual, highly self-serve, and then so you can repeat the cycle as you want, with those ideas to drive business impact. Um, um, this again kind of talks about a little bit of detail on that dashboard on you can also use real-time data that is fed back to your banking system to to also run A/B experiments along with our traditional ideas that you want to run. And all of this, as I was harping on earlier, one of the core philosophy of a platform is typical bank systems. When vendors work with banks, they try to give a system that works really well, but you have to either raise a change request or you have to talk to someone at that organization to get things done, right? Whatever we build, we on our end, we try to make it as self-serve as possible so that any team member, whether it's business, whether it's ops, whether it's compliance, they have a ready dashboard that they can go and use, and change any feature or configuration as they want, anytime they want, right? So no code friendliness is one of our key things that we like to brag about. Yeah, I think that's about it. Just idea was to basically just give you a sense of what we do. And if anyone's interested, we can always jump on a call and discuss how we can help your team out. So, hey, thank you so much for the time, Charu. Charu and Shankar sir, over to you guys for the main session. Yeah.
Hey, thank you, Nimit. Thanks for the insightful introduction about Hyperface. And good evening, all of you. So it's an honor to meet the panel here. We have the right mix from the network to the issuer to a startup product management head, bringing in their perspectives to cards engagement, right? So let me start off with you, Kavita, given you sit in a very unique pole position of being a part of a network which operates in India and operates globally. So what's your view in terms of how are you seeing the engagement domain evolve? And what are
Sure.
your views?
Yeah. Thanks, Shankar. Hello, everyone. Happy to be here. We see a few main themes globally, and that's relevant to India as well in terms of engagement. The first is frictionless in terms of card payments. So that has become table stakes, in fact, to say that we need frictionless payments, whether that be tap, online, whatever, and it has to have high success rate, but also needs to be free of fraudulent transactions. So that's a big mix of things, and that is going to be table stakes no matter what, and that will continue, right? The second thing that we see is embedded payments. So payment is no longer just one point of time piece in the life cycle, it is the life cycle. So essentially, if you're thinking travel, you need to dovetail payments into that embedded experience. It cannot be a standalone with multiple hops moving in, and that's not something that consumers prefer. It has to be so seamless that the payment happens and the consumer moves on, because their focus is getting that experience or that product or that service. It's not how the payment gets done. It's the second thing. The third thing, which is a very big theme that we see globally, and it's also very important for Visa, and we work on it with all of our issuers, some of whom are here, is really about personalization. And when I say personalization, it's not about who the customer is. That is, of course, table stakes. That is like a targeting segmentation behavior. What do they do? A mix of what do they do and how they do it actually informs how personalized the experience has to be. That means, what is the mix of categories they are transacting on? What's the frequency in which they transact? And how often do they, come back and do the same transaction again and again, which is really subscriptions. Now, that actually informs a lot of things, right? One is that card top of wallet or not? Is that card being used only for specific lifestyle or specific travel services? And if it is top of wallet, how often is it taken out, and how much is the mix between domestic and cross border? So all of this really informs personalization. And really, a step forward on personalization actually is hyper personalization, because that's going to be a mix to say that, hey, the consumer could be one of hundreds of personas. It's not just 3 or 4 customer segments that we are talking about. So really frictionless, embedded, and hyper personalization. I think those are big themes that we have seen play out globally and we see playing out in India.
Kavita, I think that's very insightful kickoff to the entire panel. And I would like to make a segue to Rekha. Given Rekha, you represent one of the largest issuers when it comes to cards in India. So out of the playbook that Kavita was alluding to, what are the engagement strategies that you are employing in HDFC as we speak?
Uh, when we were looking at millennials and Gen Zs, we realized that instant gratification, real time, and to what Kavita alluded to, which is personalization, customization. These are the key factors to drive engagement on the cards. So when we were designing the Pixel credit card, which we launched way back in 2024, so our focus was on entire digital experience, like Kavita also mentioned about frictionless payments through contactless scan and pay, as well as in terms of give the choice to the customers to design his own card, right from the card design options and to the brands what he wanted to transact on, which he could choose for 5 and 3%. I mean, we customize it and we gave the option. Customization was the mantra for us. So that's what we focused on. We felt these are the 3 parameters which will drive the engagement on the cards.
So thanks, Rekha. And I would want to call upon on you, Ankita, in terms of from Access standpoint, what are the engagement strategies that you employed and what do you think is working very well?
So, Shankar, first of all, glad to be here and meeting everyone. I think, listening to what Kavita and Rekha had to say, I can for sure say that personalization is one of the largest things that probably all banks, all organizations which are into consumer-facing domain are looking at it in a big way. If I have to tell about Axis Bank, this journey is not new. It's probably a 3-year-old or a 3 or 4-year-old, right, into personalization. And currently, we are at a stage where it has evolved quite a bit. And we have not only implemented it through certain products, but our approach has been a lot channel driven as well, right? One of the things that has worked very well for us is actually driving this through our mobile app. We have a very, very strong penetration of our mobile bank. Almost 85% of our customer base does engage on the mobile app, and hence we use that as the primary channel, primary engagement tool to drive any of these personalized nudges that we are talking about, right? So I think I would completely echo what both of them had to say with regards to this. Having said that, I would also want to, tell you guys about one of the challenges that comes with personalization, right? Now, for issuers of large scale, the branding, the marketing, the consumer recall consideration is a large thing, right? The moment you move into a personalization kind of a domain, right? Because it is a segment of one, it is very difficult from to actually land from a brand perspective. It has to be experienced at a consumer level, and unless you've had like a personalized nudge or an offer coming your way and you've experienced the goodness of it, it is very difficult to sell it, to say so, right? So let's say if I have to market a particular credit card product of the bank, this is not the marketing platform that can be used. So the goodness is huge, meaningful, but at the same time, the challenge that it comes with is that it's not marketable at a large scale, right? It has to be more infra and experience based. Yeah.
Perfect. In fact, before I make a segue into the following follow-up question, I had a very interesting observation, right? This is one of the few panels that are moderated where Nimit and I are minority. If you look at Kavita, Rekha, and Ankita, yourself, Charu, and Rini, the co-hosts, are the majority. So it's a pleasure for a change, and uniquely very different. So.
That's the right and the sharp observation
Absolutely.
you made, Shankar. In most of the such panel discussions, I'm sure all the women will agree that we became the sole representative there, and which
Yep.
is generally the men-dominated, panels which we would have attended.
Absolutely,
Yes.
and we call it manels. So,
Yeah.
so I just picking on what Ankita said, right? Personalization and the platform, and how do you address at scale? And given both HDFC and Axis are at a certain pivot and they've grown, so, what kind of challenges do you see when it comes to engagement, right? And the segment of one that Ankita was talking about, right? It's good to talk about, but when you get it to the consumer, how do you ensure that it is personalized to what a consumer wants? So, Rekha, you go first, and then we'll get Ankita in.
Uh, See, it's in terms of the engagement as well as in terms of the servicing, right? All of us are making that. I will also kind of include servicing. We are trying to move everything digital to the digital platform.
Mhm.
Also, because you have multiple challenges, right, in terms of communication to the customers, in communicating all the whether it is offers or any feature or the value proposition which you want to communicate to the customers. You will use the digital platform what you have built to communicate to, given the fact that you are also bound by regulatory framework like a DNC and other thing basis which you can't reach out to the customers. So you'll have to navigate through all of these challenges to reach out to the customers. So one of the things which we had thought out and put it together was that entire onboarding, which we call it as right from the time when the customer receives the virtual card to activating the card and then doing the card control to set the limit for e-commerce, international and contactless, and also do the pin setting. Everything has to reside in a single platform, not do it through multiple platforms, so that he completes that entire onboarding, as what we call it, in single in a minute's time, within a couple of clicks in a particular platform. So all of that we had to think through and put it out. And the same platform, which is our Pays app, which is the payment app which we had created, designed, and Pixel is housed within that particular platform for both onboarding as well as for servicing. We felt we should create a uh, pretty good onboarding journey for the customers, so that our objective of engagement and also any communication what we need to do to the customers from a engagement perspective, value proposition, what has been offered to the customer, what he has opted for, to keep reiterating that, and as well as what even Nimit mentioned, right, in his presentation, that I can track where is he spending, what is he spending on, how much reward points he earns. All of that information is available in one single platform. That is what we actually try to create and build that. And including the servicing aspect, we designed it in the same platform so that the customer doesn't need to go out to any of the platforms. And as much as possible, we want to ensure that all his regular queries are addressed through that particular platform. If they are little complex and something which needs to be addressed by a phone banking executive, so there is a team which calls out and addresses the customer. So that's what we have looked at.
I think that's perfect. And in fact, HDFC leads the way when it comes to cards and cards engagement and the segment. So, Ankita, your view, please, in terms of scaling and the challenges of balancing scale growth with still maintaining the
Yeah.
engagement levels as high as.
Yeah, so Shankar, I think there are a lot of practical challenges once somebody gets onto it, and especially implementing these kind of programs at a bank at a large scale are not at all easy. I think if I have to tell you from my experience, two challenges that I would like to call out besides the overall branding thing that I mentioned. The first is the iterativeness of the entire process, right? It is not, you set it up, think through the entire strategy in Nimit's language, put out the PRD once and you are done, right? Because it is so iterative and evolving, and one just has to go through it to actually understand that. Because not just because consumer segmentation is evolving, right? It is also because the kind of expectation in terms of offer constructs, the gratifications, how do you sort of, bring it to life, it is evolving. In fact, so much so that from the time, let's say, a tech BRD would be written in terms of how do you want to deliver the UI UX, and it takes at least a quarter or more, at least, to deliver it. By the time you come and bring it to life, you realize that, the life has moved on and there is much more newer ways of, doing the same thing that could have happened, right? Second, actually now I have three things. Second is, the evil lies in the all the edge and the corner scenarios, right? Which is the happy path is the easiest to chart out in any kind of a framework or a engagement framework, but it is the unhappy path or those edge cases where how do you deal with those and make the customer experience come alive in those moments is very, very critical. Third, very, very, very difficult, I would say, for any organization is actually measurement of any personalization kind of a program, right? Primarily because there is nothing called ceteris paribus. There are multiple things happening, RBI regulations coming in, certain spend categories going off, probably risk environment changing, and the entire mix of customers you're onboarding may be changing over a period of 6 to 12 months, right? And you are trying to test a lot of these programs in the middle of that. So isolating the impact of what you're trying to run, right? Even in a test manner, and truly figuring out the assessment of what impact it has built is not an easy process. So to my mind, these are some of the practical challenges when one is implementing this at scale.
So that's very insightful, Ankita. So Nimit, I would want to come to you now in terms of given you are a platform which is sitting amidst all the engagement conversation that's happening and you're implemented in multitude of banks. So
Right.
what kind of features that Hyperface offers are most often used, right? If I were from a product lens perspective and kind of the benefits that those features end up delivering, if you want to delve a little into that.
Sure, sure. Okay, so let me first cover the personalization charter because that's been the topic of discussion and fascinating one as well. So one is what we notice is personalization. So depending on the maturity of the portfolio, certain teams may know exactly what signals to use to personalize which aspect of the journey, right? In other cases, there's a lot of data, but there's not a lot of mine insights from that data for us to take a call. So for those scenarios, what we do is something I like to call it progressive personalization. So what we do is we basically don't assume that, oh, I know what this person will want versus what this person will want, right? We start with a cluster of, let's say, 100, 10,000 users, right? And then we try to give them something, then we observe, we try to give them some incentive or a program or a communication, keenly observe what they do about it, and then basically re-cohort them every 3 days or 4 days, right? Which is done by a system called smart tags on a platform. So that kind of solves for the basic cold start problem that many teams have, at get-go, is in how do I go about personalization. And as Ankita was rightly hitting on, it's not just about doing personalization for sake of it, also about closing the loop from a ROI perspective and making sure you get the best bang for the buck, right? So what we have seen in our experience is, hey, it's one, don't go after 1:1 right away. Start with a cluster, start with as big a cluster as you are confident about, and then let the platform help you slightly figure out the right signals, so they can invest more on, right? So for that, essentially, our cohorting feature ends up becoming a very useful feature for banks, because all they have to do is basically go to a chat interface, because now we have an AI-based cohorting system. You can go and start chatting, hey, why don't you find people who have done this kind of behavior in the past, and we crunch all the data that we receive from the bank to automatically create those cohorts. And then the second part that kind of fits into that is our this the front end SDK, right? Because essentially, as both Ankita and Reha was coming at, hey, you have great ideas, but then you also make sure they get to the right person at the right time, right? So our communication engine, our front end SDK, all of them come into play to make sure the time lag between someone thinking and the customer seeing is basically counted in days and not months or quarters. So that's, again, is a moving target. Obviously, they are tackling a portfolio which is very, very large, so they're more complex to deal with. So, but that's a moving target they keep going after. Then how do we cut short the time? So the no code platform essentially comes in very handy there, where you can see the entire pipeline of personalization happening in front of you. So yeah, I think
So
that's
I hear you saying that, Nimit, what Ankita was alluding to, a quarter seems to be crunched to days. Would that be fair?
I,
I had a question.
I
I was
should.
trying to respond to a question from Vikram
I,
on chat saying, how is it different from a marketing team? What the marketing team does today? There was a question on chat. So I will try and phrase it and respond on your behalf, Nimit, and feel free to chime in terms of what Hyperface does today is a single platform from designing a campaign, executing a campaign, targeting a cohort to rendering it, right? All on a single platform.
yeah.
And rather than dealing with silos that we typically encounter.
But
It,
I'll just like to add, we are a tool, and I see the tool with a very specific intent. I
uh-huh.
think the people like Ankita, Rekha, they all know exactly what strategy you use. Right? We are here just as a tool to help the teams figure out, to help the teams execute, right? But the strategic insights and everything, we're working towards that. But I think the major focus is to just be a very fast tool, stitched to tool, like you said, for teams to go fast. Yeah.
Perfect. I want to go to Rekha now, right? And Rekha, what cardholder behaviors matter the most, right? Because there is plethora of data that you collect. But what would you, as the head of cards, look at saying, okay, this is going to be very valuable for me, and this is the data that I'm going to leverage?
See, I will focus on the your three parameters which all issuers swear by, right, or go by, right? I mean, it's like practically it's not on a daily basis, at least on a monthly basis you track the portfolio performance, which is largely what we call it as spend per active card, the amount what the customer is spending on his card, which is important, and where is he spending, the category where is he spending. Those are all key parameters what we are looking at. Second, obviously, from an income perspective, is he actually revolving, to generate income? And thirdly, whether he's opting for EMIs on the card, which will also again help us to generate income. These are the things which we look at. And a primary factor, right, is what I started off with by saying that fantastic onboarding and awareness is what we focus on. The fact that the card has to be activated within 37 days is a mantra which we all go by. The race to get the cards activated within 37 days to prevent card closure and then subsequent actual transaction engagement. While from an RBI card closure perspective, 37 days becomes important. But from a transaction engagement perspective, whether the customers have used the card for any kind of transaction in the first month, in the first few days, is what we track very closely by. to understand why the customers are not using the card in those first few days. How do I drive it? Can I put out any kind of offer in the first few days and subsequent, what we call it as a window of, customer value, the life cycle management, what we break it into, first 1 week and then subsequent 30 days. And then after that, track it for a couple of more months to see how is he engaged on the card, whether I have to kind of, based on where he's spending currently or he's not started his engagement, then you design a campaign, you roll it out. So it's a constant campaign management which we are doing in the first 30 days, and then subsequently you do it more like uh, you then also continue to track it till the time he is engaged on the card, right? I mean, more cards are activated, then it is beneficial to the business. And then obviously you also track the profitability on an overall portfolio level to see how is it faring and performing versus the other cards what you have in the portfolio. So it's a constant evaluation what we do, and in line with that, the initial engagement, how are you communicating to get the customers to even do the basic stuff like card control, pin setting, and all of that plays an important role. So you will constantly monitor that, review whether your communication is struck the chord with the customer. Customer has understood how he has to go about doing it. Can I simplify it further? It's also a technology-based solutions, right? What we've put out, how we've stitched the entire journey together. So whether I need to simplify it, we do carry out voice of customers to understand whether the customers have understood how the journey has been stitched, onboarding in terms of the card control to pin setting, whether he's able to do it in a seamless manner, whether he gets stuck, whether he has to have a way of reaching out when he gets stuck and make it further, uh, simplify it further. These are things which we continue to monitor at very frequent level. I mean, the idea is that we don't want to lose the window and the opportunity to increase activation, engagement spends, and thereafter even getting the customers to revolve and also do the EMIs on the card.
Absolutely. Spoken like a true issuer, Rekha. Engagement leads to profitability and unit
Yeah.
economics. So, Ankita, your views on that in terms of how do you drive engagement? And then I would want Kavita to come in. But first, you, Ankita, in terms of engagement driving profitability.
Sure. So I
So,
think everything that Rekha said, of course, makes sense. I wanted to pick out one specific thing within that. I think one of the things she mentioned was early book behavior, right? Early on book behavior. What do you do with the customer in the initial period, right? Now, one of the things that we did at Axis Bank, and I think it has worked pretty well, and is something called unboxing. Okay, so I think the idea was simple, and it came in about 5, 6 years ago while we were in COVID, that okay, I think everybody's faced by an Apple product unboxing. So is there a way that we can deliver some sort of a digital unboxing for a card to the customer? It was not just stemming from reiterating the product features, but because credit card activation is a very very friction proof journey, right? In the sense, or full of frictions. One expects the card to the card holder to set a pin, to do card controls, enable contactless, enable e-commerce, use it, and within that as well, set limits, sub-limits, and so on and so forth. And all of this while trying to still resell the card and get customer to make the first transaction, right? So one of the engagement piece that we went live is a digital unboxing, and it is like sort of a journey which in a gamified manner takes customer through this entire early process and lands the customer with why, creating some sort of an urgency in terms of using the card as early as possible, right? Now, so rather than measuring early activation, we actually moved to a more of a lead indicator in terms of how many customers are actually doing the unboxing. Because we knew, I mean, the data told us that of the people who did unboxing, the chance of customer activating or doing an actual spend on the card is 50% more, right? So my lead indicator moved from actual, getting the first swipe on the card or the first spend on the card to actually getting that unboxing done. And I knew that it would take care of the spend in a probably 1.5x multiple, right? So that's just like a little practical example on what Rekha mentioned. Besides that, I think for a large bank, which is universal in nature, product deepening is also very, very key, right? In fact, Rekha, I remember in your last investor call, your MD&C also mentioned about product deepening and how some of these products like cards are such high engagement product that they really feed into and coupled with a liability product or a loan product or an asset
Absolutely.
product of the bank is what drives the real engagement, right? I may not just, while of course I might have credit cards of multiple bank, but if the bank is my primary bank with deepening of other products as well, my loyalty increases tenfold because I want to do all my financial transactions on one platform and probably with one bank. So going beyond cards, I think of overall product deepening, not just within card, trying to sell an EMI and so on and so forth, but other banking product deepening is also at a bank level, huge stickiness driver. Yeah.
Makes absolute sense in terms of one product driving the penetration of other products and in terms of how does a consumer become a multi-product customer. So Kavita, your views in terms of staying on the same perspective of engagement driving profitability and improving unit economics.
So I think Rekha and Ankita very nicely articulated the early lead indicators, activation, early month on book, and of course product deepening, like Ankita said. Let's if we take a step back, right? Broadly, if we look at this market, your number of credit cards is increasing. Your number of unique card holders is not increasing at that clip, which means that more and more customers are going to have more than one card. And so, one of the primary objectives that pretty much every issuer solves for is how do we put our card top of wallet? So, what we focus on a lot is understanding what drives top of wallet behavior, right? Because there's data that can actually help you understand that stickiness. Now, of course, some of those are, like spend per card, spend per active card, number of merchant categories where that card transacts, frequency with which the card transacts, and so on. But if we dig a little deeper, if your card has been saved on more than one platform as a card on file, that indicates a higher propensity for top of wallet, right? If your card is saved for more subscription transactions, that automatically means that your card is going to recur more. And if your card is being used, your cross border to domestic ratio is very healthy. It means that the consumer is trusting your card enough to go and tap it outside. They trust it, and if they are tapping it outside, there's higher reason for them to tap it within as well. That's one. And the fourth, and which is something that it's an interesting fact point, that if the card is enabled for tap and pay contactless, and Ankita was referring to card controls, so when a card is issued, your consumer has to go and activate it for contactless. A contactless customer will always exhibit a better behavior or a better relationship with spends. So I think some of those then put together as a combination become a metric that we track to say that, hey, is this card holder truly top of wallet, or is there more to be done with this consumer? For instance, if a consumer is only using it on one use case continuously, now that might not reflect that consumer's behavior at all. It means that they're using some other card as their standalone, as their normal card. They're using X card just for one use case. So I think that then defines stickiness, which is more perennial, which is beyond your early month on book, which is your steady state behavior. Because there's also the whole principle that in the first 12 months, 12 to 24 months, the way your cardholder engages will help us understand how the longevity of the consumer with that card.
Thank you, Kavita. I think very insightful. There was a question, and I think staying on course with the engagement and unit economics, profitability. There was a question from Sid in the chat. How prevalent is the revolving behavior? Is it increasing? Rekha, first you, and then I want Ankita to come in. From an issuer's perspective, what's your take on the revolver behavior? How deep is it? Is it growing? You're seeing it as a growing trend?
We have seen it going down in the last few years due to multiple reasons. very high awareness amongst the existing carded customers. Second, related to the bureau, right? Bureau information is also being sent to the consumers at regular interval to know what is his bureau score, and hence uh, there is a great amount of awareness which has been built in consumers' mind that my score leads to me getting more lending products, not just credit card. Also, you know, it will deprive me of various lending products, and hence he is very conscious. Third factor is also with uh, many of the payment apps which have emerged in the market, they're all driving uh, payments through those payments app, right? With VBPS and the payment apps, there's more awareness and they are prompting customers to make the payment. With all of these factors, we do see the customers, the number of customers and also the quantum of value which was getting revolved earlier, all of that has been steadily going down in the last couple of years at an industry level. It's not unique to our bank, it's across the industry itself, which is what we all are grappling with. And hence, we are looking at alternative streams of income. That's what I started off with by telling you that these are the factors, parameters which we kind of track on a regular basis. And hence, now we are looking at what are the measures we can look at to drive uh, to increase the profitability, to look at alternative means to drive the engagement on the cards.
Absolutely. Ankita, do you see is your observation in line to Rekha's as well in terms of
Right, Shankar. Shankar, now this is almost like a universal truth for last 5 years, right? That revolve rates are on a slide down. I think if you have to ask any of the card issuer, hands down, this is the biggest business challenge that everybody is facing. So much so that there is a need for relook at the business models, as Rekha mentioned, in terms of revenue streams and so on. I think the entire problem has been accentuated by, of course, starting from COVID, right, and the flushing out of all probably so-called vulnerable customers, right? I think the other reason why this has sort of stayed at that level or just seen a further slide down is also, we as an ecosystem have not, I think the net addition of cards, right, has been sort of on a slower rate compared to what it could have, it was pre-COVID. So the number of new to credit or new to card customers that are being added at an ecosystem level, right? The kind of credit environment that we've had in the country for past probably 18 to 24 months. I mean, we are on a much better recovery at the moment. I think those are the kind of reasons basis which this continues to slide down. And given that it has been such a constant trend, issuers have figured out or have had to sort of, devise alternate strategies in order to tweak the business model and sort of remain as and protect the margins. Yeah.
So thank you. I think I saw a very interesting question, and I think which is top of the mind for everybody in terms of offer fatigue, right? And we'll do based on the question, we'll do an interesting segue to Kavita. Kavita, how do you see from Visa's vantage point? How are you seeing rewards getting redefined or reinvented, right? So that you eventually leading to customer engagement and not fatigue. So in a way, we'll try and address that question. Please share your views.
Yeah. One of the themes we are seeing is rewards are no longer just transaction linked. It's becoming more of a life cycle item. So it's more of milestones. It's more of across a month behavior. It's more of diversification of spends across categories behavior. So that is where we see rewards moving. It's no longer about if you do this transaction you get X% off, and of course those exist as well, but the transition is quite out there for all of us to see, right? The second thing that is also happening is there is more gamification in showing rewards. Essentially, it's not about, hey, you earn and then when you accumulate X amount, you'll go and burn. But it's more about you've earned so much, there's so much to go till you can actually start using it elsewhere. These are the places that you can play with for using that offer and so on. So intentionality in that burn is changing, and that helps in building customer trust with the ecosystem. So that's number two. Number three, again, I think I'm going to sound like a broken record. It goes back to personalization, right? Because offer fatigue actually happens when we are just praying and praying across the entire base with the same kind of offers. Then there is no differentiation between what X entity does versus Y entity does. And given a market where everybody, almost a lot of people have more than one card, they're going to keep seeing the same offers again and again. And that's exactly where personalization comes into play, which means that you understand the behavior of your consumer a lot more, and you're intervening at different parts of the life cycle, not just at activation or at acquisition. So those are three themes that we see evolving in terms of rewards. One is personalization, another is intentional showcase of gamified rewards, and the third is being there across the life cycle and not just making it transactional.
Perfect. Thanks, Kavita. I think that's very, very useful. Nimit, I want you to come in here and from a hyperface standpoint, right? Gamification has emerged as a key engagement enabler, and also the offer fatigue, right? Why don't we juxtapose both these and see on how hyperface as a platform
Sure.
was to address this?
Sure. So yeah, it's a typical problem, right? When we think of a lot of ideas to execute, and then suddenly, if customers develop ban blindness, those are offers and ideas, then it's a problem of customers just not adopt, even opening the interface, or opening those emails to figure out what's happening for them from offers perspective, right? Now, essentially, what the way we look after this problem is one, instead of trying to give them a certain offer, let's say for basic personalization, I should give you something like this, right? Traditional approach would be that, hey, you give him this, then you wait for a certain next period, and then you come back and see how many people reacted or did react, and then next quarter you define something else, right? What we have felt is that approach works fine, but it also extends your learning period a lot. You have to basically go in batches, right? What we have figured now is a better architecture is that you stack up three options for every cohort. We basically create three alternate options. Hey, basis personalization and whatever data I have as of date, I'll set up this construct for you, this gamified milestone, or this particular time-based offer which will unlock for you on the weekend, or when we detect that you let's say an offer which opens up when we see that you're transacting a lot in certain MCC or MID, right? But then we also keep two, three alternatives ready to be unlocked for you. Like if we see that you're not really reacting or adopting that particular idea to particular construct to get engaged really well, we suddenly switch you over to a different cohort and give you something else, right? So that by the time you're done with the whole time period, which is let's say a month or month and a half, of experimentation period, you have much richer insight as to what works, what does not work, and then kind of repeat the cycle. So essentially, the learnings of a quarter gets compressed. A learning of quarter, or I would say 1.5 quarter, gets compressed into a month or so. Right? So I think that's an approach we have found to be worked really well. Which is be ready to accept that the customer may not react to what you think is right. Right? I think that's the basic
It's a build, test,
philosophy.
measure, do. It's just build, test it out, and continuously measure.
Correct. Correct.
Okay.
Obviously, with controls, so it can't be like fully random, fully AI driven, where it just goes sideways. There's checks and balances to make sure the budgeting is taken care of. But I think that's what we feel to work really well.
So I'll come to the favorite part of my discovery these days is Gen Z, right? And I definitely want an issuer's perspective. Everybody talks about gratification, everybody talks about instant gratification. And at least I wonder, in fact, my son is a Gen Z, so I can't comprehend him. So how are issuers dealing with and building value propositions? Rekha, first, you go first for Gen Z.
I with Nimit and Hyperface's favorite topic is personalization. I think they covered it in their presentation as well. And I also mentioned it that when we were actually doing research on Gen Zs and millennials, and what came out clearly was particularly Gen Z, that they want to be given the choice. They don't want a, buffet, right? They want a la carte. They want to have the option to choose. I need to be given the choice and the instant gratification. Everything has to be instant, right? From the onboarding to offering, all of that. So our, the value proposition, what we designed on the Pixel side was to give customers the choice. While I can't really make it very open, saying that choose any brand and anything what you want, we also had to kind of keep that within the framework. What we wanted to build it within, from the profitability perspective and so forth. But we consciously at every stage, right from the card design to the discount what he could avail, or the cash back what he could avail on, which is 5 to 3%, we have given them a choice is what we are driving it in Pixel. So we are looking at the same philosophy on in many of the products or the servicing platforms what we are building, so that customer is able to kind of voice his opinion, feedback, and also opt for what he wants, what he's seeking. So we want to build on that philosophy. The give him a choice, menu based, what he can choose. That is what we hope to build as we go along. We understand this segment is very particular about what he wants, and he is okay to forego, right? I mean, if he doesn't get something what he's looking at, and also what we've seen as we've gone along, which you would have also, most of us have realized, in terms of events, right? I mean, they also want to be part of many events. I mean, if you're looking at concerts, spurt in the concert happening across the country, I mean, people want to, you know, go and attend any of these events, whether it is a famous music singer, or whether it is a music band, whether it is a improv comedy act, any of those. They want to be there and kind of, and in each of these categories, sporting events also for that matter, each of these events, they have a choice. They are expressing their choice, and hence we are actually looking at offering that to the customers. And we started that with last year. We rolled out Dil Dosanjh concert across 8 cities sponsorship. We worked in along with Zomato district, and we saw unprecedented response. So we felt, concerts, events, these are something which appeals to this particular segment, and we should continue to pursue that. While not that every time we offer to them, it may appeal to them, we need to be also careful in what we're offering to them. What could appeal to them one time may not necessarily appeal to them next time. So we are trying to figure that out. So like you said, this generation is totally different. We think we know them, but yes, every time they surprise us, and that's something which we are trying to, you know.
We absolutely don't know all of them. and
Yeah,
and
yeah.
in entirety. Like, I'll just leave it here in terms of my son had this a product idea for you, Rekha and Ankita both. He said, why don't we have a Crow branded card with Book My Show? I go to all the events. You have it with Amazon, you have it with Flipkart. So why not with Book My Show, where I get subsidized tickets? That was the goal if I'm taking a credit card with an issuer. So, Ankita, do you have any perspectives to share when it comes to Gen Z, and how are you trying to address their
Yeah,
needs?
so Shankar, I wouldn't say, as others mentioned, that to sort of proclaim that I know the segment very well, but I think couple of things, emerging trends, right, for this particular segment. One, I feel, frictionless journeys and seamlessness is even more important. For example, I mean, a very simple thing, people are used to swiping, right? So can you swipe to do a transaction rather than, entering your OTP and stuff like that? So something as simple as that, which just takes away the friction, I feel is going to be very, very important, right? While if you ask the other generation, I think the answer could be that no, if I'm entering OTP myself, I feel the transaction is secure, right? I've actually done a marketing research wherein this came out, where while OTP is a friction, but people of a certain generation believed it kind of gave them a sense of safety. But I don't think, as long as at an ecosystem level, the security of the transaction, etc., is solved through seamlessness is what will matter the most. Second, I feel I think ours is a generation, or probably the generation before us as well, used to save and then spend, right? But here is a generation where I think the aspirations would be much different, right? And probably spending level may be running at a faster pace compared to income levels, right? And hence the entire innovation in terms of product and delivery, how do you deliver affordability as a solution, and how do you build easy EMI solutions, right? We had a very recent launch of a product called Flex. It's a co-branded credit card along with Google. And one of the core value proposition in that I think has been thought through is actually splitting the transaction or the bill into three, right? So that's a core feature, probably, I believe would be of interest to Gen Z, slightly younger population, given the spending habits. And yes, I mean, of course, it's a credit product, so the discipline, etc., will have to be built in. But this just combines the affordability along with the discipline that a card product calls for. Yeah.
No, I think very, very insightful, and there could be a lever in terms of customer acquisition as well out there when you try and use the feature and you share it with your friends who are not on, who don't use your cards. So there could be a potential acquisition hack as well. It could be an acquisition hack as well. I know we are going to be running on time. I would like to come to our most favorite topic, without which no panel ends today, is AI, Gen AI, Agentic. I'll go one by one in terms of how are you seeing Gen AI or Agentic redefining the rewards playbook in 2026? What to expect? So, Nimit, will go with you first, and then Rekha, Kavita, and Ankita, if you're okay with that sequence.
Sure, sure. I think in a very couple of sentences, if to summarize the impact of AI on rewards stack, the engagement and the reward stack, I think the way I would conclude this is key. AI is gonna help you. So it's like this. Earlier, there was a bunch of dashboards and configurations that or levers that one had to deal with, understand, and then kind of configure them for a certain idea, right? I think the path between, hey, I have an idea in my head, and then how do I set it up so that it can be rolled out to customers? That whole track would basically, be collapsed with AI. I think that's the single most theme that I see, wherein new ideas will also emerge, like the new ways of using tools also emerge through that track. So currently, the entire onus of setting up all the nooks and crannies of any platform falls under the person who's thinking of that idea, right? All of that effort will basically shift to the machine, wherein all you do is think of an idea, let the machine figure out a low risk way to try it, roll it out, and come back to you, report to you about how it worked. I think that's the new paradigm. I think that will be unlocked with AI in this, 2026 and onwards is what we're betting on as well. Yeah.
I think absolutely. Rekha?
We would, the bank is already has made some progress in this particular sphere. And first, obviously, Ankita was mentioning, credit card is just not a regular engagement product. It is also something which drives the engagement across the bank, deepens the relationship. And that's why, we are highly, entrenched into the banking, relationship and the product stack. And any changes we make to the product, we also kind of align the branch banking teams and all those folks, because they interact with the customers. That's one point I wanted to highlight. And from the AI perspective, like Namit was mentioning, this is also important that the scaling of offers, right, will become faster. I mean, it's not dependent on us to think of it, then take couple of days or weeks to execute it through the campaign. Here, you will be able to customize it one to a large extent, which today becomes um, to very slow process. With AI, you will be able to customize it, come out with unique offering at short notice and roll it out, and then also pick up the learnings faster and then tweak it and move ahead. So that benefit is there with AI. Second thing, you it will also help us retain the customers, right? If there are any silent attritors, you are able to kind of catch them early. You will be able to build it within your portfolio, engagement, and understand which customer is likely to move away, is slowly moving away from your, from you, and hence you can now look at offer a series of introduce some series of offers there to retain him, and then finally you may have call out. First could be the initial offerings which gets rolled out, and subsequent could be a call out to understand what he's expecting from the product and from the bank, and then you retain that. So it also becomes a great retention tool. I mean, you can do a lot more with the AI. Rollout will be faster, more efficient, and also it will also be cost efficient. You can't create investing in resources and agents for in phone banking to retention teams to all of that, right? You can't keep investing. So when you have a scale, then you will also be able to manage with these tools with minimal agents, right? That is what you're looking at. So it also becomes a good cost measure for the business,
Absolutely. You said faster time to market with
Yeah,
offers, and also from a cost containment, cost takeout perspective in
yes,
terms of how do
yes,
you reduce the cost to serve your
yeah,
clients, right? That's something that
yeah,
without compromising obviously on the
yeah,
engagement.
yeah.
Ankita, your take, and then I'll come to Kavita.
Yeah, I think one of the use case, and I think Kavita might echo what I'm going to say, is and the prospects that we are most excited about from an AI perspective is the agentic commerce, right? We've in fact been partner for one of the demos at the India AI Summit as well, wherein actually an end-to-end transaction being executed by an agent, right? Today, I think all of us are fairly used to going to a platform like ChatGPT or a Perplexity or a Gemini for just searching for deals, right? Where do you get the best travel bookings, or where do I buy so and stuff like that. How do you nudge the customer from there to actually do that transaction? We see it very real. I think networks are at the forefront of it, and which is why I said that I'm sure it would resonate with what Kavita might have to say. But I think this is sooner than later, and it's going to just transform the way the transactions happen altogether. So that's the biggest bet. Of course, a lot of what Rekha and Nimit mentioned in terms of how do we make our own the work more efficient in terms of as a portfolio team, as a entire card business management team, what does it mean in terms of cost optimization and probably unlocking certain revenue opportunities? That remains. But from a customer perspective and from a transaction perspective, I think just the end-to-end transaction via an AI agent is going to be the next game-changing thing. Yeah.
Absolutely. I think I echo that too, Ankita. Kavita, that's a good segue to you. Now,
Yeah,
if you could give us your views in terms of where do you see AI
sure.
playing?
So, absolutely echo with everything that Nimit, Rekha, and Ankita said, particularly what Ankita said, which is about agentic commerce that we are calling visa intelligent commerce, which really means that your experience shifts to wherever the consumer is. Today it was the e-com websites, but tomorrow it's going to be a chat bot where they're going to finish their entire transaction. So how does payment seamlessly get in there to complete it rather than have multiple hops for the consumer, right? But if you were to look at it broadly, there are two themes that we really are focusing on globally and in APAC. One is how do we leverage agentic AI to do better at our jobs, which is like, portfolio optimization. How do you execute, measure, and then, come back and take a decision based on that measurement as to tweaking your campaign, etc., etc. That's a big theme, and that can be applied to other things. That could be applied to dispute management, that could be applied to customer service, a lot of things, right? Essentially, how do you use data and agents to help take faster decisions, like Rekha was saying. The second thing is tangentially connected to Visa Intelligent Commerce, which is how do we bring chatbots to consumer experience, right? Now, and that's something that we are actually live working on with a number of our clients in APAC, which is if we pick up travel as a use case, how can I make that entire end-to-end travel booking journey seamless for the consumer? That means that they're going somewhere to search for deals on flights, on hotels, on experience bookings, and how can we bring all of that together in one platform? And that platform could simply start off from WhatsApp. That platform could sit inside a bank's app. That platform could be driven through assisted channels like your customer service agents. But how do we make sure that the consumer finishes the journey end to end with one particular entity, right? And then end it at the payment. Now, travel is one use case. There could be multiple use cases that builds on top of the fact that consumers are getting much more comfortable with chatbots and decision making, right? But while we talk about all this, one of the trends that we also see, and this might also be more relevant within India and Asia, is how much of decision making are we giving away to the agent? I think there is a lot of the tasks that the agent is doing, will expect to do, but there'll always be that human supervision layer, at least as far as we can see in the near term, to be able to facilitate and act upon that choice that is given by the agent rather than leaving the decision to the agent. Now, of course, as Gen AI evolves, decision making agents will also evolve, but right now, that's where that journey is.
Perfect. So I think very insightful. If I were to summarize in terms of what we see from AI is as an engagement enhancer, absolutely with the time to market in terms of how you could leverage various engagement tools, and from a cost perspective. And the third piece is the balance of human versus autonomous agents, right? That's going to be something that we'll see in near term. I think we are on the top of the hour. Rennie, are there any questions that we have left unanswered and you would want the panel to address?
I think we have covered pretty much, all the questions that have been coming in. So I think, yeah.
Sure. So thank you, Nimit. Thanks, Rekha. Thanks, Kavita. Thanks, Ankita. Very insightful panel, and it was absolutely a delight talking to all of you. And thanks, Rennie.
Thank you so much.
For facilitating.
Thank you,
Thank you so
everyone.
much.
Bye
Thank
bye.
you, everybody.
Thank you.
Thank you.
Bye.
Bye-bye.
Thank you.
Thanks.